Hello, everyone. Very good evening to all of you. Hope all of you are doing great. Yeah, hi guys. Can you just confirm if you can hear me or not? Ashu, Nupur, Rashmi. It's all girls. Yes, can you hear me or not? Great, great, great. Okay, let me tell you a bit about myself before we actually move on to starting the syllabus. My name is Satyarth Prakash Dwivedi, and I'm an ACCA member, and I've been teaching from the past 8 years. My students have scored all India ranks. I'm an ex-PWC, and I've had all India ranks, all world ranks, and my students have consistently performed very well. And today we meet to discuss advanced taxation. This is the first class, so I'll just keep it very light, but at the same time, I'll keep it very informing as well. I'll tell you almost everything about this paper, how to handle this paper. But before that, I would like to know something about you guys. Can you just briefly tell me what do you do? How did you land up doing ACCA, and what's your background, so that I have a little bit idea about how this class should proceed. Yes. Can we start with Ashu? Yes, you can type in the chat box since you'll not be allowed to unmute yourself. Ashu, can we start? Ashu, can we start with you? A bit about yourself? Yes, please. So that we get to know each other better. Can you please mute me? You're already muted. I cannot unmute you. That's the sad part. So you'll have to type in. You'll have to type in the. Okay, Rashmi is already. I'm a CA qualified in December 2018. Wow. Working with Wipro, moving to UK. So landed up doing ACCA. That's great. That's great, Rashmi. And what about Ashu? Ashu, can you just quickly tell me? And Nupur. Okay, Ashu, you're a CA qualified ex-EY. That's great. That's great. Ex-EY. And how long has it been since you qualified? May 2014. That's quite a long time. Okay. And what about Nupur? You've done BSc Accounting and Finance from University of London. So from there I got no. Okay, that's great. That's great. And you've already cleared your skill level and mostly all the papers. Is this your last paper? Or for all of you? Is that the last paper, guys? Okay, you still have to clear other papers. So which other papers remain? And have you ever done UK taxation? Have you done UK taxation? No. Okay. Okay. No one's done TX. So you are BSc qualified, Nupur. So you must have appeared for the taxation exam, haven't you, Nupur? You've done BSc, so you must have cleared all the papers of skill level, right? Or did you get an exemption? From ACCA, but I have not from BSc Accounting and Finance. And I mean, I just want to ask you, have you appeared for all the papers you've got exemptions on in ACCA? So you've done UK tax, Nupur. Okay, you had to appear for UK tax and FM. Great, 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 great. Okay. Fine. Let me just take you to the ACCA website. Have you guys already checked out the ACCA website? And if not, we are going to do that today. I'm going to introduce you to some of the most important documents which you will need to to clear this exam. And a lot of people feel that since, I mean, ACCAs and ATX is one of the easiest subjects because of the high pass percentage. So we'll discuss that as well. So we'll discuss the high pass percentage. But the problem is that no P level exam can be taken very lightly. You have to take it very seriously as you take your SBL, as you take your SBR, as you take your AFM, APM, AAA. The same level of sincerity should be there for ATX as well. Now, what I'm going to do is I'm going to assume that you guys know nothing of UK tax. And obviously, Nupur is going to help us since she's already done a bit of UK tax. She's cleared that paper. So she obviously knows more and she's going to help us. Definitely. For the other two, you do have a fair idea about Indian taxation, right? Ashu and Rashmi. Yes, but it's like a bit difficult, a bit different, not difficult. It's a bit different from how you treat the Indian taxation system. For example, you don't have depreciation here. You don't get a depreciation. Do you guys know that? You don't get a depreciation deduction here. Yes, Rashmi or Ashu? Yeah, you don't get a depreciation in. Yes, in UK tax, you don't get a depreciation. In UK tax, you get something known as a capital allowance. So there's a fixed percentage that you get. So yeah, those basics, I think I'll have to brush up for all of you. But don't worry, this paper is not entirely about practical or problem solving. It's not entirely about that. It will give you the scope to be creative. I have one question regarding UK financial. Okay, please go ahead. Please go ahead. Ashu, I'm waiting. Yes, I have zero knowledge of UK tax. Please. Yes, I will tell you the basics. In fact, today we are going to start from the basics only. But before that, yes, you are allowed to choose your financial year. We'll talk about that. How there are different rules regarding that, and we will discuss that in the first few classes. Definitely, I'm going to tell you how you choose a financial year. I mean, it depends on the company, but in the US and the UK, you have this liberty to choose your own financial year. Isn't it great if you had it in India as well? But sadly, it's not there, right? So we will discuss on that as well, right? And it's generally the year starts from 5th of April and ends next year. Start from 6th April to 5th April next year, right? So we'll talk about that as well. As I said, that most of you would not be knowing. So the pattern that I'll be following is we'll be going strictly with the syllabus of ATX. But to understand ATX, time and again, we'll have to go back to tax, and I will tell you the basics in my whatever notes I write, and I will provide you with the notes as well. Will that be fine? Will that be okay? Yes, guys. Okay, so let me take you to the syllabus part, which is one of the most important documents that you'll ever come across. It's one of the most important documents that you'll come across. And also this document, yes, as per taxation rules, it is there. But again, you are allowed to, I will discuss everything, Ashu. Don't worry. The idea is not to perplex you. Okay, we'll go step by step and we'll discuss everything. Right? Okay. So let me first introduce you to your examination. I'll first introduce you to the examination. Just confirm me once if the voice and the picture video quality is seamless. Can you just confirm me once if the voice and the video quality is seamless, or is it breaking? Rashmi is saying it's breaking. Okay. What about the others? Ashu says it's fine. Kind of fluctuation. Nupur is saying it's fine. Kind of fluctuation. Rashmi, I think you might want to check on your internet. You might wish to check on your internet. Yeah. For the others, if it's fine, then I'll go ahead with it. Can I just have a quick yes or no from our host as well, which is VGLD? Can I just have a quick yes or no? Okay. So can you see my screen? Can you see my screen, guys? Okay. Rashmi, is your network sorted now? Rashmi, is your network sorted? So basically, ATX has all the knowledge, all the foundation of the knowledge that you've taken from the tax. So from your F6, ATX builds on that knowledge of F6. But unfortunately, I have students who get exemptions. Most of them get exemptions at tax level, and that's one reason why they are not able to maybe get that kind of expertise. So that's why I have chosen this path to keep going back to tax, that is F6, and talk about the basics and what happens and why it happens, and then move back to the ATX. And that is one of the reasons why ATX becomes, by the time we end the course, it is going to become the one of the easiest subjects that you have studied, right? So there are three levels to ACCA. One is the foundation, then the skills, and then the P level. You are already on the P level, so I don't need to do too much of that with you. I'll straight away come to your examination, how your examination is going to be. So there is going to be section A, right? Section A will have 35 plus 25. How many marks does that become? Yes. So section A will have two compulsory case study questions. So those two case studies are going to be compulsory. What we will do is we will also go through the case studies while we are studying, right? So that we have an idea of how the case studies are going to be. Okay. So there is going to be two questions. One will be 35 marks. Second will be 25 marks. Okay. And there will be 5 ethics marks. So why do you need 5 ethics marks? Can someone tell me? Why do you need to have 5 ethics marks? Yes. Can someone tell me why do you need 5 ethics marks? No, it's not professional skills. It's not those marks that you get at the SBL and SBR. It is ethics marks. Because see, as a tax consultant, you have a dual responsibility. And what is that dual responsibility? When you become a tax consultant or probably a taxation expert, your dual responsibility is to, towards your client as well as you as the government. You don't want to cheat the government or defraud the government. And because you are preparing taxation for your client, because you are preparing returns for your client will want to reduce his tax liability as much as possible. Yes, all the chartered accountants that we have here, that is what the client wants. Yes or no? Rashmi and Nupur know it better. Rashmi and Ashu, sorry. Rashmi and Ashu, chartered accountants, you know it better, right? What does the client always say? Have you been into practice or Indian firms? Yeah, the client is always insisting on paying least amount of tax as possible, tax reduction at any cost. And that is why such creative tax planning happens in India. if you've taken the DT classes from VG sir, he tells you how planning is done, right? We also want same. I didn't get you, Ashu. We also want same. What does that mean? You also, I mean, you also want to give as less tax as possible. Yes, and that is one of the reason why ACCA includes these ethics marks, because as a tax consultant, you have to follow certain ethics. Basically, these are professional ethics only, which I call I am COP. So what is I am COP? I stands for integrity, C stands for confidentiality, O stands for objectivity, P stands for professional behavior, and the next P stands for I am COPP. I am COP. When you talk about ethics, you are a COP. So the other last P stands for professional skepticism and due care. So these ethics you have to follow. So there will be 5 ethics marks, right, included within this section. I'll tell you how to crack that as well. Then section B is going to consist of 2 compulsory 20 marks questions covering both business and personal tax. So we'll be doing both in this syllabus, also in the tax F6 syllabus. We'll be covering both of those, which means we'll be covering the personal tax, that is for individual like you and me, and for business like Mr. Mukesh Ambani or Mr. Richard Branson. He's a UK businessman. So we'll consider both of them. We'll talk about both of the people, like one common people, mango people like me, and the other will be rich people like Mr. Richard Branson, Mr. Mukesh Ambani, right? So we'll talk about both of them. So you'll have 220 marks questions, right? Section A and section B. How many marks? 60 plus 20, right? 60, 20, 60 plus 40, 220 marks. So that makes it 60 and 40 is 100 marks. Your exam is going to be for 3 hours and 15 minutes, right? It is a 3 hour and 15 minutes examination, right? The good part about any ACCA exam is you don't have to rote learn anything. You'll be given the tax rates, you'll be given the allowances and certain reliefs. They give you that in the exam. Does it make it simple or not? Does it make the exam very simple or not? No rote learning, no rectification. Yes. Does it make it simple or not? Yes. Nupur, do you understand rectification? It's rote learning, which we always do. In India, we are used to it. Nupur, in India, we are used to rote learning. Yes, right from class 10th. These are the formulas. And cram these and you'll pass the maths exam. It has happened with everyone. In CA, we have done for every subject. Not for one subject, we've done it for every subject. Which subject? Audit are you talking about? Rashmi, are you talking about audit? ISCA was the most dreaded subject. For every subject in CA, for every subject, I think everyone must have rote learned something or the other. Yes. Okay. So tax rates, the good part is you don't have to rote learn anything. Tax rates, allowances, information on certain reliefs also, that will be given in the exam. Wherever they'll mention that it is given in the exam, I have also taken that in my notes that this will be given. I'll tell you that this part will be given in the exam. Okay. Now let's move on to introduction to the syllabus. Let's move on to the syllabus part. Now, there are certain rules of studying advanced taxation. And those rules are defined by whom? ACCA, right? ACCA defines those rules. Good part is that advanced tax has the highest pass percentage. Let me take you to the pass percentages for advanced tax. Let me see if advanced tax they've given the pass percentage. Okay. Go back. Yes. Can you see my screen? There are certain pass percentages given. Can you see my screen? Yes, Ashu, Rashmi, Nupur. It makes my life so easy. I just have to address 3 people. Ashu, Rashmi, Nupur. NRA. From so we study about NRI taxation. I am teaching tax to NRA. Nupur, Rashmi, and Ashu. Okay. So NRA, all 3 of you, can you see this? December 2020, 40%. December 2020, 40%. March 2021, 44% people passed. Just imagine, in an exam, if 44% people are passing, can you call it difficult? Can you call it difficult? Other subjects, SBL, SBR, 50%. The most difficult is the APM and the AAA. The problem is that you have to appear for one subject. There is liberty of appearing for one subject at a time. So those 30% people who are appearing and passing that subject, they have great knowledge of how to qualify that paper. So that is a problem. It appears as if 30% people have passed. It must be a simple exam. It's not a simple exam. It's not a simple exam. APM and AAA, I think, are the most difficult exams. And similarly at skill level also, PM and AA. I think those two are the most difficult exams. Nupur must have given those papers. Nupur, have you given those papers? Nupur, you've given those papers? No? PM and AAA you did not give. So you got an easy pass. You got an easy pass, my friend. Okay. June 2021, 41% people have passed. September 2021, 36% have passed. Can you beat that? September 2021, 36% have passed. It's less because as more people start, because people saw the trend. Oh, 40% are passing, 44 are passing, 41 are passing. Let me also do this. Might be easy. But as more people appear, the percentage goes down. Do you know why? Do you know why? Why does that happen? As more and more people appear, the percentage keeps going down. Yes. Because the number of serious players decreases then. Suppose 100 appeared for a paper and 45 were serious players, they passed. But suppose 200 appeared. Now it cannot happen that out of 200 again 45% were serious players. Right? So that's why the percentage dropped. And again, it's picked up just 1%. All in all, it's a relatively easy paper. I will not say it's a very easy paper. It's a relatively easy paper to pass. Just give me a minute, right? Let me get some water. Yes, guys. Sorry. I had to get some water. So now introducing the syllabus to you. The aim is to apply relevant knowledge and skills and exercise professional judgment. So again, wherever judgment is involved, you are allowed to be a bit creative. Okay, in providing relevant information and advice to individuals and businesses on the impact of major taxes on financial decisions and situations. So advanced tax, we are going to be focused on the United Kingdom. So UK tax will be focused on our entire rules, our entire sections, allowances. Another good part is you don't have to remember the section here, right? So entire UK tax, we are going to be focused on all the rules relating to the UK taxation, right? And it the from the F6, it further develops the key aspects of taxation introduced in the TX paper that you took, right? TX UK within the applied skills module, and it extends the candidate's knowledge of the tax system together with their ability to apply that knowledge to issues commonly encountered by individuals and business. So basically, when you're doing advanced taxation, ACCA wants you to be a consultant who knows things, who can advise the client on how to ethically reduce his tax burden, take advantages of the schemes of the government, right? UK tax will also include VAT. So we'll not just be focused on income tax, we will also be doing VAT, VAT, and it's not like GST. So GST, my friends here, Rashmi and Ashu, they know how complicated the GST tax has been. How many tax rates are there? Yes, Rashmi and Ashu, how many tax rates are there? Yes, all filing is to HMRC. Ashu, have you been studying tax? 10 tax rates are there. Rashmi just told us 10 tax rates are there. And to a taxpayer, it becomes cumbersome. I mean, it's not fair for the taxpayer, right? He is the one paying tax and he's the one taking the burden of compliance as well. 10 tax rates. Many of the inputs are not allowed, right? But here you'll find that the VAT system is quite simplistic, right? Now, successful candidates should have the ability to interpret and analyze the information provided and communicate the same to their whoever is the client or the intended audiences, right? Yes. Is this much clear or not? So basically, they want you to be a consultant, an advisor, a friend, philosopher, and guide to your client as far as UK tax is concerned, right? Now, syllabus builds on already acquired knowledge of F6. So I would advise you to get the F6 basics right. Apart from these classes, the three classes that we are having Monday, Wednesday, and Friday. So apart from these classes, I would advise you to go through the F6 book as well. It's a pretty easy book to understand. If you want, you can find the book. You can get the book from this center only, VGLD. So you can get that book from this center only. If you want, they can share the ebook also with you. They can send you the ebook. You might have to pay some nominal charges. So my advice is that this paper will build on that knowledge. I will time and again go back to taxation. But the point is I cannot complete the entire taxation book because I have to teach one subject and not two. Right. So my advice to you is that keep that book with you. Sometimes if you understand a topic over here in the class, my advice is go back whenever you have time, 10-15 minutes, revise it from that book. Yes. Can you do that? Yes. Can you do that? Yes, guys. Can you do that? Okay. Rashmi, Nupur, Ashu will try. Ashu will try. Okay. Great. Okay. So Ashu will try. Right. Now it builds on the basic knowledge from earlier tax exam and introduces candidates to stamp taxes. Right. Now this is an optional exam. So those aiming to require or desiring more than the basic knowledge, right? Syllabus will also extend the knowledge of income tax, corporation tax, capital gains. All of this we've studied in taxation and inheritance tax. So there is no concept of inheritance tax in the income tax, the Indian income tax. Yes. There is no concept of inheritance. No. But here we have inheritance tax as well. So if you're getting something from your mom and dad, you are being taxed on that as well, right? So inheritance tax to encompass further overseas aspects of taxation, like sometimes we might also be touching upon DTAAs, right? We might also be touching upon some aspect of taxation of trusts, the multinational transfer pricing, right? And additional exemptions and reliefs would also be there. Generally, computations will normally be required in support of explanation or advice and not in isolation. So you will not be asked to prepare the entire thing. Only UK. That is, it is only UK. It applies to only UK. Applies to only UK. Right? Okay. Sometimes also Europe taxes, but I think from March we will consider the UK to be a separate after the Brexit. So we'll assume that UK is now a separate entity, separate country. Earlier, European aspects also were there in the VAT and all, but now we will assume that the UK is a completely different entity. I think they will give some indication of that. So we will see. So we'll see if they have given or not. When we see, this is one of the most important documents, and that is why I'm giving so much emphasis on this. I can straight away go on and introduce you to UK tax F6 revision, but I want you to understand what this exam is and what it wants from you, which is very important, right? Most of the students study the entire thing but do not know what this exam is. So they will practice thousands of computations. Baba, they're not asking you computations. They are not asking you to prepare the entire return, right? They will just require the computation in support of your explanation, not in isolation, right? So they will give you a theory question and they will want a little computation with that, right? Candidates are not expected to concentrate on the computational aspects of taxation. Is that clear or not? You are not required to focus on the computational aspects. Yes. Is that clear or not? So CA final, CA inter, F6 taxation, sir, we were always given this, and now you are telling us a different story. Our hopes are shattered. Yes, guys, are you feeling like that? Do you get that feeling? In case of, yes, guys, am I audible or not? Am I audible or not? No huge computations, no huge big 2-3 pages calculation of business PGBP and capital gains and other, no big pages. You have to focus on the advisory aspect, because when we say that you talk to your clients and you are dealing with sophisticated client, they already have the softwares. There is no point making you do the calculations, and that to CA final, doing all the calculations on a calculator. No, nothing of that. Will we learn CT 600? We will come to things. Just give me some time. Ashu, I think you've already started with your preparation. Have you? Just give me some time, right? Freelancer now have some of the, those are forms. Basically, you are talking about the forms, if I'm not wrong. So those are the forms. We will touch upon those, but as a tax consultant, you are not required to fill up those forms. You basically, what you are doing is you are working as a freelancer in UK, right? Or you're in India. Okay, you're in India. So basically, when you go to UK, what happens is people will come to you for advice. So you are in an advisory role. Suppose you are manager, senior manager in EY London, So then you'll be in an advisory role as far as the tax is concerned. That is what advanced tax focuses on, right? So you can take a sigh of relief that you don't have to do what you did in CA Inter. You don't have to do what you did in CA Final. You don't have to do what you did in F6 taxation, right? You are not expected to concentrate on the computational aspect of taxation. Instead, you will have to develop your analysis skills, interpretation skills, and also communication skills. Candidates are expected to be able to use established tax planning methods and consider current issues. So whatever current issues, that is two most important parts of this paper is going to be, one of the things that is going to be is tax planning and current issues. Those two things, current issues, it could be crypto, it could be COVID, it could be probably, they could even ask you from the Ukraine Russia war. They could ask you questions from that. So we'll try and address those things as well. Now, section E of the syllabus, we'll come to the syllabus, but they say contains outcomes relating to demonstration of appropriate digital and employability skills in preparing for and taking the ATX UK examination. So you will need the digital skills. What are the digital skills? That is computer, that is Excel, that is MS Word, right? In SBL, if you've cleared, how many of you have appeared for SBL? SBL, AFM, has anyone appeared? SBL or AFM? Yeah, so you must have seen they give you Excel, sometimes they give you MS Word, right? So those things they will give you. And also this includes being able to access and open exhibits. So they'll give you exhibits in SBL. You've already done that. When it, right? Requirements and response options from different sources and be able to use the relevant functionality and technology. So most of you coming to ATX have already given one or two papers, mostly SBL, SBR you've given, right? Okay. And these are developed by practicing and preparing for the ATX, specifically developed, right, for your ATX UK exam, using the learning support content for CBE via the practice platform. And so we will also consider, we'll also do the practice platform, right? Okay. So what are the main capabilities that are required of you? You should be able to apply further knowledge and understanding of UK tax system through the study of more advanced topics within the taxes studied previously and the study of stamp taxes. So stamp taxes is a new thing which was not there in F6. So this is something that is taught at the advanced taxation level, right? Identify and evaluate the impact of relevant taxes on various situations and courses of action, including the interaction of taxes, how different taxes interact with each other. What is the effect of one tax on another, right? Thirdly, provide advice on minimizing or deferring. So there is deferral of tax liability as well by using the standard tax planning measure. So we'll train you on that as well. Then communicate with clients, HMRC. So as a tax consultant, day in and day out, you'll be communicating to HMRC. So unlike the Indian taxation system, it's not a one-way street. It's a two-way street in the UK scheme of things. Two-way street, when I say about two-way street, it means that you are also able to raise things to HMRC on a real-time basis. And you get the solutions to them as well, right? And also other professionals, sometimes you are required as part of Big Four or as part of any audit firm, tax firm, you are required to raise consultations with a taxation department. So how will you deal with those consultations, right? Also, again, as we discussed, apply employability and technology skills. So most of what you have to focus on is A, B, C, and D. E we will do when we are doing the CBE platform, right? Yes, anything till this point? Anything till this point? Yes, guys. Any problem? Anything till this point? Yes. NRA. Nupur, Rashmi, and Ashu. Right. Okay. Let's come to the syllabus. We'll take the syllabus one by one. Everything we'll study. We'll try and understand what all they are going to ask in the syllabus. So let's start. First will be knowledge and understanding of the UK tax system through study of more advanced topics. What I will start with is already the basics that you've studied in F6 taxation, even if you've not. So I will start with that. And time and again, I'll be going to the F6 book, referring to that book so that your concepts are clear as well as mine. Because obviously things keep changing and we should always go back to basics and understand them, right? With the study of more advanced topics within the taxes studied previously and the study of stamp taxes. So this is a new thing, stamp taxes, which was not there earlier. So they've included that. Firstly, they'll ask you about income and income tax liabilities in situations involving further overseas aspects and relation to trust. So we'll be studying a lot of overseas taxation and trust as well, and application of additional exemptions and reliefs. So what are the additional exemptions? What are the reliefs available, right? Secondly, we'll be studying about chargeable gains, capital gains, which you call, like the Indian taxation, you also have the chargeable gains, capital gains in the UK taxation, and situations involving further overseas. So every time you'll see that in the ATX paper, they will focus more on the overseas aspects, right? In relation to closely related persons and trust, again, trust and overseas, those two are the keywords for this ATX paper. Trust, basically, trust is an entity created, right, in relation to closely related. So you must have studied this associate entities in CA final, transfer pricing. Have you studied that? Related parties. So this is the same thing that they talk about. And the application of additional exemptions and relief again. Then inheritance tax, again, overseas. Also calculation of liabilities arising, principles of valuation, reliefs available, transfer of property to and from the trust. Trust, basically, I told you, it's an entity created. So basically for the benefit of someone else, that is a trust. Overseas aspects and further aspects of administration, right? Then corporation tax liabilities in situations involving overseas and further group aspects, and in relation to special types of company, the application of additional exemptions and reliefs, right? And lastly, you'll study about stamp taxes and the VAT system, which is the easiest part. If you can crack the VAT part, things become more easy for you, right? Just give me a minute. Then part B, in part B, okay, can you just give me a minute? Let me just confirm something. Right. Can you just confirm once, guys, if the stream is seamless, the video and audio? Can you just confirm it once? If the stream is seamless video and seamless audio, no Atco factor. Okay, great. Right. So VAT tax, and which is the easiest part. VAT is going to be your easiest part that you'll come across. Then impact of relevant taxes on various situations and courses of action, including interaction. So how different taxes interact with each other. So firstly, taxes applicable to a situation. So you'll have to identify what taxes are applicable. So again, these are going to be case study based examination, right? So they'll give you a huge case study. You'll have to identify which taxes are applicable. Alternative ways of achieving personal or business outcomes may lead to different tax consequences. So if you suppose you register a company or a partnership firm, right? So it could lead to different taxation aspects. Then third, taxation effects of the financial decisions made by businesses and individuals. So whatever financial decisions you make, suppose you obtain debt financing, so what will be the taxation effect, right? So those things will be considering. Also issue of equity, is there in tax or not? Then tax advantages or disadvantages of alternative course of action. So what are the tax advantages or disadvantages, right? Then statutory obligations imposed in a given situation, including any time limit for action and the implications of non-compliance, right? What are the statutory obligations, which basically deals with fines and penalties. When you see statutory obligations, right? So what are the time limits? What are the fines, penalties, right? Part C, we'll discuss about minimizing deferring tax liabilities by use of standard tax planning measures. So we'll not do anything illegal. These are legal measures, legitimate ways, right? What investor, there are certain investments in some certain type of accounts in certain plant and machinery that will give you greater tax reductions, right? It will reduce your tax liability. Then legitimate tax planning measures, which the tax liabilities arising from a particular situation or course of action can be mitigated. Thirdly, the appropriateness of such investment, expenditure, or measures given a particular taxpayer's circumstance or stated objectives, right? Mitigation of tax reduction. When I say mitigation, it is reduction of tax in the manner recommended by reference to numerical analysis or reasoned argument, right? Ethical professional issues and current issues in taxation. Okay, right? This is everything that you have already studied, but in a different world. Yes, as chartered accountants, most of you, if you're coming to ATX or from some other part, you've already studied all this, you've already been introduced to all of this, but in a different world. So adjusting to this, so now see, even in finance there is a multiverse, right? There are different universes. UK having a different universe, US is having a different universe, US has different forms, 1099 and whatnot, right? So that's a different multiverse. So there is like different universe of taxation and finance, right? And as ACCAs, as chartered accountants, we have to deal with sometimes multiple laws, multiple tax laws, multiple employment laws, right? Business laws. And part D will be communication, right? Communication of advice, recommendation, information in a required format. So here your communication will be tested. If you've not focused on communication in your earlier studies, could be CA final, could be F6 taxation, here you'll really have to brush up on your communication skills. You'll have to choose the right format, you'll have to choose the right words, and only then will you get the marks. Presentation of written information in language appropriate to the purpose of communication and the intended recipient. The problem with the education system which we have been following is they are not as practical. But when we come to ACCA, ACCA is very practical. It deals less with the burdens of your rules, your rates, your computation, but it deals more with the practical aspect, because rules, rates, section, you can always look it up in the book, right? Also, Google is always there. Whenever you are in doubt, what to do? What to do when you are in doubt? Yes, guys. What do you do when you are in doubt? Do you Google or not? Yes. So Google is your best friend. Why do you need to rote learn things? Why do you need to remember things when you can Google them, right? Thirdly, conclusions reached with relevant supporting computation. So yes, that will also form a small part. Assumptions made or limitations in the, so sometimes you have to make an assumption. For example, that something that's not given to you in the question. So you'll have to make an assumption to that regard, right? Then other non-tax factors that should be considered, that will also be there. Party talks of employability and technology skills. Then they've given further detailed guide on what all they are going we are going to study. So, but what we need to actually know from this detailed guide is what is excluded, right? So what all is excluded, right, in this further knowledge income tax. What all is excluded is scope of income tax, details of specific anti-avoidance provision, except as stated in the study guide. So if it's there in the study guide, it will be there. Otherwise, no. Details of what constitutes a remittance, profit of non-residents from a trade dealing or developing land in the UK. So this is excluded. Offshore receipts in respect of intangible property, that is also excluded, right? Income from employment, pay system. Pay system, have you guys ever been in touch with the pay system or something in the course of your employment? Or yes? Rashmi says no. Rashmi, if you haven't and you're going to the UK, then you will be very soon. If you haven't, then you will be very soon. So overseas aspects of income from employment, including traveling and subsistence expenses. So all of this is traveling and all. So all this is salary. From self-employment, details of specific anti-avoidance provisions, except stated, tax treatment of overseas traveling expenses, property and investment income. So all of this is excluded. Child benefit, charitable donation, all of this is excluded, right? You really don't have to do all of this. Use of exemptions and reliefs, right? Condition that a company must meet in order to qualify. So all of this is excluded. Don't need to worry about this, right? Yes. Again, scope of tax, what is excluded from this part, from part 2, that is capital gains. What is excluded is, again, detailed knowledge of statements of practice on partnership capital gains, not asked. Deemed disposal or change in profit sharing ratio, not asked. F6 it used to be asked, not now. Capital gains like tax on disposal of indirect interest in UK land and buildings by non-resident, not asked. Again, excluded. Capital gains tax and trusts, overseas aspect of capital gains tax and trust, computation of capital gains tax payable by trustees. So again, capital gains tax and trust is not asked. Again, excluded. Basic principles, conditional contract, rebasing, all of this not asked. Again, all of this is not asked. Yes. Then inheritance tax, let's see what is excluded in inheritance tax. So you're going to say that, sir, we've never studied any of this, and you are telling us this is all excluded. Sir, how do we understand, right? Just go through this. I know you've not studied any of it, right? It could get a bit overwhelming when you look at the topics. So, okay, enough of what is not asked. We'll mostly exclude that, right? Okay, so that was all about how your exam is going to be, how your syllabus is designed. Now what we will do is we'll understand what is taxation, and we'll go ahead with doing that. But you'll have to give me 2 minutes so that I can connect my iPad with this, so that I can start explaining you about the basics and what F6 had in store, right? So just give me 2 minutes so that I can connect my screen, and then we can move on. 2 minutes, you can also breathe. Yes, guys, can you see the screen? Everyone? Yes, okay. So in this chapter, what we'll be doing basically is a revision of whatever we've done in F6. So we'll be doing studying about a bit about accounting periods, calculation of the tax liabilities, right? Whatever tax liabilities are, how do we calculate? What are the due dates of payment? Normal date, quarterly installment, group pay arrangement is also there. That if you are part of a group, then there is an arrangement that one person, any one entity can pay tax for all the others. Okay. Administration, what is the notification of chargeability, company tax, submission date? So all of the procedural aspects, what are the penalties, assess amendments to returns. You can also amend your return. Once you file your return, you can also amend your return, something that you have also functionality in the Indian taxation system. When you file the revised return, yes. Have you studied about revised return? Yes, guys. Yes. 139.5. Is it 139.5 in Indian tax? Yes. But no, we are not doing the Indian tax, right? But time and again, I'll be giving you comparison, how it compares, right? Compliance checks, also discovery assessments. So there is something known as discovery assessment. I'll just come to it. Information inspection, who can do inspection? Basically, it's an officer from the HMRC who can do the inspection part. Then appeals. Group pay arrangement, basically it means that, suppose, Rashmi, do you know what, have you studied consolidation? Who taught you consolidation? Sharma sir? Yes, Sharma sir. So there is holding and there is subsidiary. 1, 2, 3, 4. Right? So in UK taxation, you have the option that anyone can pay tax on behalf of this entire group. So any one person can pay tax on behalf of this entire group. So we'll study about that as well, but very brief, right? Not the way we used to study in F6, right? Then personal liability of senior accounting officers. What happens when there is incorrect returns or there is under assessment? What is under assessment? Basically paying less tax, right? And the actual assessment shows a higher tax liability. So before I start, do you know what is taxation? Do you know what is taxation? Yes. Do you guys know what is taxation? Yes. Can anyone tell me what is taxation? Charge on income of residents. Okay. Okay. Income, that is income tax, right? That's not exactly tax. There are a lot of taxes. Payment to government. Yes, it's a payment to government. But is it out of your own will for services? Okay. Is it out of your own will? I think it's not a payment to government. It's not a payment to government. Taxation is a necessary extortion of money. Just imagine. Yes, it is imposed. So just imagine you are earning, you are the one working hard. But what is the government saying? Is it asking you anything? Is it asking you anything? No. It just says no. You have to give 30% of whatever you earn. So if this is 100%, we will take 30%. 70% you can keep, but we will take 30% of it. It is extortion of money. I completely agree with the fact that it is extortion of money. Extortion is what? Yeah, I don't ask you, I just take it from you, right? And it is necessary also. Why is it necessary? Tell me, why is it necessary? Why do you think this extortion is necessary? Yes, it is forceful. It is forcefully extorted from you. Nupur, are you following? Right? Why is it necessary? The nation wants to know, why is it necessary? Tell me. Why is taxation a necessary extortion? Yes. Because out of this money, they spend this money, they invest it in building roads, in building transport, in building to run the country, basically anything and everything. If you don't have oil, how does a government earn money? If the government does not have oil, for example, Gulf countries, I will not talk about Gulf countries, but if they don't have oil, if a government does not have oil, then how do they earn? They earn through taxes, right? So this is the basic premise. So there is always, whatever rule a government creates, there is a reason behind that. Whatever rule the government creates, there is no rule without a reason. There is a cause and there is an effect. Whenever you see any country's taxation, there will always be a cause and an effect. If the government is giving you depreciation, or capital allowance, what is the cause behind that? What is the cause behind the capital allowance? Tell me. Depreciation or capital allowance. Capital allowance is basically, if you invest in machinery, you get a certain percentage as deduction. So why would they need to give capital allowance? What is the cause for this effect? It's an effect. It's not a cause. Capital allowance is an effect. But what's the cause? What's the cause of this effect? There is always a cause to an effect. Why do you need to give capital allowance? Tell me. Yes, Nupur, absolutely right. Ashu, you are also absolutely, because this gives a kind of, when you give a capital allowance, it gives a kind of incentive. There is an incentive to the businessman to invest in machinery. What happens when you invest in machinery? You are going to manufacture something. When you invest in machinery, you are going to manufacture something. You are going to employ a few people. So it's also a way of employment generation. It's also a way of employment generation, right? Yes. Yes or yes. Yes, guys. Yes or yes. So this is the basic premise of taxation, which I wanted to discuss with you, right? Now we'll move on to the more advanced concepts. So this is the basic premise, right? Why taxation? What is taxation? All that is done. Now I'll move to the more advanced part of what is, first of all, it's just a revision. So I'll take it slow, but I'll maintain a fine, brief pace, right? So corporation tax liability is calculated for UK resident company on their TTP. So what is basically TTP? If I talk to you about TTP, TTP is taxable total profits, which is your income, but it will not include, it will exclude what? Exclude the dividends. It will not include the dividends. TTP is your income excluding the dividend, plus any chargeable gain, less any qualifying charitable donation. Now you are going to ask me, sir, what is this qualifying charitable donation? Yes, how many of you have that question? Add any chargeable capital gain and reduce income, exclude dividend, add any chargeable capital gain and reduce any qualifying charitable donation. So what is a QCD? Anyone has that question? Yes. Anyone who had this question? What is qualifying charitable donation? Kind of 80G, but government tells you that okay, if you give certain donations, 80G from the Income Tax Act. Yes. Ashu. Yes. Yes. What about what about Rashmi and Nupur? No, dividend is excluded because this is your profit that we are taxing. Dividend is taxed separately. In UK tax, dividend is taxed separately. We are taxing the dividend separately, and that is why we are talking about the companies. We are talking about the corporation tax liability. You'll have to understand that we are talking about a corporation. What is a corporation? A company. Okay, Ashu, right? It is taxable. Dividend is taxable, but the point is, that to calculate the corporation tax liability, we are not including the dividends, right? Okay. Now QCD is basically donation. If subsidiary receive dividend, we exclude the dividend part. We take the dividend separately. Okay. I'll tell you. We'll come to that. We exclude because profits are taxable at a separate rate. Dividends are taxable at a separate rate. So income excluding dividends plus any chargeable capital gain. So in case of the corporates, even the capital gains are not taxed at separate rates, minus any qualifying charitable donation. This is any donation that you make. If it's a qualifying donation, then we will give you a deduction of that, and then you can calculate your TTP and pay tax on by applying the appropriate rate of corporation tax to the company's taxable total profit, which is the TTP. So it might be 30%, 20%. They'll give it to you. I'll also tell you, but they'll give the rate to you. Whatever the rate of tax is, you'll have to apply that and then move on with calculation. Is this clear or not? This part is clear or not? Yes. What about the others? But you did not think about the cause and effect. Again, I tell you, whatever rule is made, there is always a cause and effect. Ashu had a valid question that why dividends. But Ashu, tell me, why would you reduce the dividends part? Why do you want to, for a corporate, why do you want to reduce the dividend part? There has to be a cause to this effect. It's an effect. There has to be a cause. What is the cause and effect? What is the cause to this effect? What would be the government's intention? Because you are taxing the net profits of a company, the TTP of a company, right? You are taxing the TTP of a company. You're absolutely right. The company does not want to tax you twice. So suppose S1 pays dividend to S2, S2 pays dividend to S3. But S1 is paying tax on the profit that it has earned. Yes or no? S1 is paying tax. S1 is paying tax or no? Yes. S2 is also paying tax on its profits. Then why do you want to, and from this profit only it is paying a dividend? So why would you want to double tax this money? Right? So instead they say, leave whatever dividend they are receiving. We will not tax it under corporation tax liability, but other places they do tax. We will come to it. We'll talk about it. What is this? Right. So accounting period, long discussion on accounting period is there. Yes. Yes, in the hands of the recipient. No, in the hands of the recipient, it is also again it is excluded now. What, because dividend is a separate taxation. Dividend is a separate taxation when it comes to UK tax, not a corporation tax liability. So again, what I'll do is I'll take you back to the F6 part where they talk about. So in the very first class, we are discussing on the F6 part, and that's good also. So I'll just have to take you back a bit to F6 taxation. Chargeable gains, computing taxable profits and corporation tax liability, 360. Okay. Okay. So they say, I'll write it over here. Knowledge from F6. You also might want to write it. Knowledge from F6. Right. Yes, it's for UK resident and non-UK resident also. Right. So they say that dividend received from other companies it could be a UK resident or non-UK resident for the purpose of tax UK exam are usually exempted. So it's exempted. Whatever dividend that you're receiving from a UK or non-UK company is exempted. We, for this, for the purpose of your exam, it is exempted. Usually it is exempted. Sometimes it is not, but we are not talking about that. It is usually exempted. And so it is not included. So it is not included in taxable total profits, right? Also, one more thing is there, that whatever dividends that you are paying, also dividends paid, so dividends that you are paid, they are excluded. They are not deductible. Okay. Yes. Video is paused. Video is paused. No. Ashu. Fine now. Did it pause for a moment? Maybe. Okay. So this much is clear or not? This is the knowledge from F6. We'll keep doing this knowledge from F6 part every now and then. Okay. Right. Moving on. Okay. I think we should take a break. What do you say? 10 minutes. Yeah, exception cases of taxability of dividend. You can read it from F6, but generally we assume even in the F6 paper that it is exempt. We assume that even in the F6 paper, the dividend is exempt. So don't go ahead and read it. Don't go on reading it. This is all the knowledge that you'll need. Yes. Yes, guys, all three NRA, non-resident ACCAs. I keep coming up with these new words, right? No NRA. Okay, can we take a 10 minutes, 10, 12 minutes break? So we come back at, it's 7:22. Let's come back at around 7:35, right? Will that be okay? Yes. Nupur, Rashmi. Okay, let's just take 10 minutes and then come back. Yeah, hi guys. Are you there? Am I audible? Seamless video and audio? Yes, people. Are you there or not? Okay, yes in caps. Great, great, great. Sounds good. Ashu. Ashu, Rashmi, Nupur. Where is Rashmi and Nupur? Rashmi and Nupur, are you there? Taken your tea and everything? Evening snacks? Yes, guys. Can you just say a quick yes? Ashu's there. Nupur and Rashmi. What about you? What about you both? Nupur and Rashmi? Nupur and Rashmi, this is the final boarding call for both of you. Can you just quickly reply or I should move on? There are 3 people. Can you just, even if one more replies, we'll have a majority. Okay, let's wait for some more time. Please, I'll drop in a message. Please respond when you are back. So please respond when you are back, guys. Nupur is back. Okay, Nupur is back. Okay, we have a majority. What about Rashmi? Rashmi is also back. Okay, give me a minute. Okay. We studied about corporation tax liability. How is it calculated and all? TTP. Basically, so you need to remember this TTP. What is TTP? Income tax, income excluding dividends plus chargeable gain, capital gain minus the QCD, which is qualifying charitable donations. Okay. Yes, there are separate rules for QCD. So we'll not get into that. That's something from F6, not required here. Just understand that there is something called as the QCD. Now again, moving on. So what is accounting period? So it is a period for which corporation tax is charged. It is usually for 12 months, but it could also be less than or more than 12 months. It could be less than or more than 12 months. So generally it is 12 months, right? So suppose, okay, we need to hold. So accounting period, any period for which the corporation tax is charged. No, it's not the same. Financial year and accounting period is not the same. That is a problem. So that's a bit of an issue. but we'll sort that out as well as we move along, right? So accounting period, any period for which taxation charges made. Usually it is 12 months, but it could be less than or more than 12 months as well, right? Now, if a company's period of account exceeds 12 months, so what happens if it exceeds 12 months? If the period of account, the accounts that you've prepared is for more than 12 months, so it has to be split between two. So suppose the period of account is more than 12 months of account. So just imagine if it is more than 12 months. So this starts Jan, December, it ends on March, starts Jan 21, ends on March 22. Now this has to be split between two periods. One is first 12 months and followed by the balance of the period, that is the short accounting period. So this is December 21. So first is going to be this 12 months, right? And then this is the balance period. So first 12 months, and this is the balance period. Okay. So any period of accounts that is greater than 12 months, it has to be bifurcated. So tax rates will apply here. If it's changed, then first 12 months tax rates for this, then balance period tax rates will apply, right? Yes, is that clear? Yes, people. Because obviously the government is concerned with what? What is the government concerned with? Collecting taxes. What rate of tax is going to apply? So that is why they bifurcate this, right? So first 12 months, and then followed by the balance of the period of account, which is the shorter period, shorter AP. It's also called shorter accounting period. Yes, clear? No, it is going to be 12 months only. The taxation will be 12 months only. We'll come to that. Hold on. It's a long discussion on accounting period. So we will definitely come to that. Okay. Right. Hold on. Now, when does the AP start? When does your accounting period start? So it could be either of the three events, right? It could be one, when you start to trade. Your accounting period will start when you start to trade. So it could start, suppose, so your accounting period could start from, say, this is 1st of Jan, this is Jan. You might start your accounting period from March 21, right? Because you've commenced your business, and your accounting period could start from March 21. This is Jan 21. Not necessarily you can start your accounting period from March 21. The second point is that when the profits of the company first become liable to corporation tax. So what happens many a times, what is going to happen is that the profits are not taxable, or they are incurring losses. So can you tax losses? Tell me, can you tax on losses? Can you tax anyone's losses? No. You cannot tax someone's losses, right? Or it can also start when the previous accounting period ends. It could start when the previous accounting periods ends, right? So three cases: commenced business, first profits became taxable first profits becoming taxable, and thirdly, when you, yes, one is when you commence business, second is first profits become taxable, or when the previous AP ends. Okay, so these are the 3 points, right? Clear? Yes or yes? Yes, guys. Is that clear? Okay. I'm going very slow because I know most of you do not come from the background of UK tax, so it has to be very, very slow, right? Now, when does the AP end? When does the accounting period end? It is going to end on the earliest of. It's going to end on the earliest of these 4. 12 months after it started, so it will end 12 months. So maybe if you started on March 21st, it's going to end on March 22. It started on 21st, it will end on March 22. Yes, right? That's the first part. End of the period of the account. Maybe you are closing your books on 31st of December. Maybe you're closing your books on the 31st of December, and it could end on this period as well. It could be first 12 months, or if you're closing your books on 31st December, it could be, but it has to be earliest of that. So in these 2 cases, when will it end? In these 2 cases, case 1, case 2. Is it 31st December or March 22? It has to be earliest of that. So it has to be 31st of December, right? Case. All my CA friends, they will know of this, right? Earliest of, last of, right? So our Indian government makes rules like this, and every government makes rules like this, right? Somehow the tax lawmakers, they cannot make simple rules. I don't know why, but there is a country which has the most simplest of rules. Can someone tell me that country? Most simple rules of taxation. Yes, UAE. Ashu, you're absolutely right. It is UAE. Why is it UAE? Why is it UAE? You have an idea? Why is it UAE? Yeah, no income tax. Just come, we'll charge you 5% VAT, and that's it. UAE, just 5% VAT. Gone. Khalas. No tension. Right? Yes. Okay. So the new company, okay. First was 12 months. Second was end of the period of account. Third is when you cease to trade. Suppose in this case, suppose you ran a business for 2 months, and 31st of May, you closed your business. When does the accounting period end? When does the accounting period end? In this case, C3, 31st of May, right? This is getting too hodgepodge. Is it? Yes. Okay. This is explanation, right? Explanation has to be hodgepodge. Otherwise, I would just copy this, right? Please repeat. Okay. So it has to be at the earliest of, first is 12 months, right? So I'll make a timeline here. And first is 12 months. So probably you started your business. This is January. This is March. This is 12 months. So this is 31st of March next year, right? So for this is 1st of Jan. This is 1st of April. This is 31st of March. Ashu. Now in this case, accounting period, when does it end? The first is earliest of 12 months. So it ends here. Case 1, earliest of this. Suppose you're closing your books on the 31st of December. So earliest of these two, what is going to be earlier? C1 or C2? Yes, it is C2, that is earlier. If you look at it, part 3 is end of the period of accounts. Second is end of period of account, or when the company ceases to trade. So suppose 1st April you started and 1st June you said, I cannot do business any longer. I'll have to end my trade. I'll have to end my trade. So this is C3, right? Or there is administration or winding up. What is administration or winding up? Basically, when you liquidate, you must be knowing what is liquidation. Yes. Okay. So basically liquidation. So earliest of this. So if you suppose C4, you are being liquidated on the 1st of May. Within 1 month, you are being liquidated. It could happen, right? So then in that case, this will be the earliest date, will be the end of the accounting period. To how many of you does that make sense? Example of B point is this end of the period of account. You might be closing your period of account on 31st of December. If you're not closing your account, then automatically it becomes 12 months. Automatically it is 12 months. But if you're closing your accounts earlier, then it will be 31st December. Ashu, clear? Yes. Clear or not? Everyone. Nupur. Ashu. Great. Now, a new company has to notify HMRC within 3 months of the start of its first accounting period. So, for the first accounting period, within 3 months, new company has to notify. Suppose you just registered a company in UK. You just registered a company in UK and you start your accounting period on 1st of April. So 3 months, within 3 months, they're saying that within 3 months of the start of your first accounting period. So in tax, my CA friends would be knowing, or who have studied tax, or whoever, if you've ever studied tax, you will be knowing that the word is very important. Yes. So it has to be within 3 months. So what is 3 months from this date? If you start your accounting period, what is 3 months? 1st April to 1st of May, 1st May to 1st of June, and 1st June to 1st of July or 30th of June. So it has to be within 3 months. So I'll take 30th June. We can also take 1st July, but it has to be within that time, 30th of June, right? So it has to be within 3 months. You have to notify. So within this time, you have to notify the HMRC. So within 3 months, you need to notify the HMRC. Clear or not? Okay. Within first of its establishment, within 3 months of start of its accounting period. And also there is a separate obligation to notify HMRC of chargeability. So these are two different things. You have to be very careful. These are two different things. One is of your starting the accounting period. You have to tell the HMRC that we are an establishment and we have started with the business, right? But 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 in case of chargeability, you have to tell HMRC within 12 months from the end of the period of account. When you become chargeable to tax, that is when you start earning profits. So here you have to notify HMRC of establishment. Here you have to notify HMRC of establishment. The word is establishment. Do not confuse it for chargeability. For chargeability, the time period would be 12 months. So suppose you started your business on 1st of April. On 1st of April, you have started your business. Now, within 12 months, it's going to say within 12 months, suppose you become chargeable. They say to HMRC of chargeability to tax within 12 months from the end of its period of account. So when does your period of account end? It could be any date. I'm assuming on 31st of March. Suppose on 31st of March 22, 21 you start, 12 months. Yes. That's your period of account. Or it could be 30th December also. But if you choose to prepare a shorter period of shorter accounting period, so then from 12 months, so within, you have to notify within 12 months. So within 12 months, notify within 12 months of, so chargeability to tax within 12 months from the end of your accounting. So if you become profitable anywhere between this, you have to notify within 12 months of chargeability to tax. Okay. Can you differentiate between these two things? Can you differentiate establishment, chargeability? Establishment is separate, chargeability is separate. Establishment within 3 months. 3 months from the start. Establishment is 3 months from the beginning. But chargeability to tax is within 12 months from the end of that accounting period where you become chargeable to tax. Yes. Now tell me, there is again cause and effect. There is again cause and effect. Why do you have to notify within 12 months from the end of your accounting period and not from the beginning of your accounting period? There is cause and effect. To every rule, there is a cause and effect. Tell me. Because here you do not know your income. Absolutely. Ashu, you are absolutely right. You do not know the income. You become profitable somewhere over here. So then the government wants to tax you. So you tell within 12 months and then you file a return. Government will charge you to tax. Got it or not? Yes. Yes, guys. Is that clear or not? Want to do a question? Okay. XY PLC has been trading for many years, preparing its financial statements to 31st December each year. The board of directors decided to change the year to 30th of April. So they are preparing statements to 31st December. Now the board has decided to change the year to 30th of April. State the accounting periods for XY PLC if it prepared one set of financial statements covering 16 months to 30th April, or two sets of financial statements covering 4 months to 30th April 2021 and 12 months to 30th April 2022. You are required to state the accounting period. What is the accounting period? What will be the accounting period? If they are preparing 16 months, then first of all, what you'll need to do is bifurcate into two, right? So, first of all, to 31st December till 31st December next year, one period. Then again, 4 months to 30th of April 2022. Yes, yes or yes. Okay. Two sets of financial statements. If they are making two sets of financial statements. Okay, one answer you had. Second answer. What if they are preparing two set of financial statements? 4 months to 30th April and then again 12 months from there. Question B is two sets of financial statements covering 4 months to 30th April and 12 months to then 30th April again 2022. Then it will be the same as the financial statements, which is 4 months and 12 months. Okay, is that clear? Yes. Okay, great. Right. Yes. Okay, again, another example. Can you just ZW has been trading for many years with a 30th June year end. Due to recent financial difficulty, it was decided that the company should be wound up. ZW Limited ceased trading on 31st December 2019 and 30th April 2020. The winding up commenced. The winding up was completed on 31st March 2021. State the dates of the accounting period from 1st July onwards. So I would request you not to look at this and try doing this yourself. Can you do this? Or you want the notes? You can take the notes if you want. You can take the notes if you want. You can just take a screenshot if you want to. Yes, done with the screenshot. Yes, guys. Done with the screenshot. Okay. So yes, tell me. Now try doing this. I would request not to look at the solution. Although it is there. If you're stuck, then you can look at this. I'll give you 2 minutes, 2 to 3 minutes for doing this quickly. Please. Question is right there in front of you. Can you see the question? It is right there in front of you. Ashu, can you see the question? Okay. Okay, so let's see what they are trying to ask. They say that you ceased trading on 31st December 2019. So just make a timeline. 30th June is your year end. So 1st of July, you cease trading on 31st of December, right? And on 30th April, your winding up also commences. 30th of April, your winding up has commenced. So winding up, this is cease to trade, right? And lastly, winding up completed on 31st March 2021. So probably next year, so 20 winding up commenced and 2021 March 21, the winding up has ended. So firstly, your accounting period will be this 1st July 2019 to 31st December, right? So the first accounting period will be this, right? Yes, 1st July to 31st December, which is the date of ceasing. And then from 1st of January, to that point that you are going to be wound up, that is going to be your second, because from previous AP2 till the winding up commencement, then from winding up to the completion of winding up, right? The third accounting period will be there. Yes or no? Okay. So 1st July to 2019 to 31st December, then 1st January 2020 to 30th April, and then 1st May 2020, that is after this 30th of April, we get till the end of winding up when it is completion, right? Yes, everyone understood. Comparative number, then they'll have to adjust it. In the IFRS, it says that you'll have to adjust it. Okay, you'll have to adjust your numbers. The previous year numbers also need to be adjusted then. Okay. Yes. So there is this income tax computation that they've given. So first of all, trading profits, right? Trading profits, then interest income, property income, miscellaneous income, net chargeable gains. You add them all, you come to total profits, then you reduce the qualifying charitable donation, right? Whatever gross amount is there. So generally what happens is that you have to gross up the QCD, right? Whatever gross amount is there, you reduce that, you come to TTP, then multiplied by 19%, that is your corporation tax rate. Any double taxation relief, will come to double taxation in a later chapter, chapter number 5. Any double taxation relief, then we calculate the corporation tax payable. What is the due date? Due date is 9 months and 1 day after the end of accounting period. When do you need to file it? 12 months after the end of the period of accounts, right? Very strange. So see, for income tax purposes, has to be different. But for IFRS, you can show a separate set of accounts. Even in the Indian GAAP, Ind AS, you do that. Ashu, even in the IGAP, you do that, right? And that is why the concept of MAT. Have you heard of MAT? Minimum alternate tax. That is why it comes. That you show two different books of accounts. One is as per the Ind AS, and second is this. So that's why they want to create this minimum alternate tax. Yes. So why is it strange? Why does it sound strange to you? It's not strange. It's the same thing that you're doing everywhere. Comparative numbers, you don't have to show comparative numbers in taxation. Ashu. Comparison you'll do of your IFRS based accounts now. Yes. This is AP. So after the end of accounting period, this is AP. It is after the end of accounting period. Have a look at it. 9 months and 1 day. So from the end of your accounting period, you have to pay taxes, or large company can pay in installments also. Also the filing date, filing you can do 12 months after the period of account. That is the accounting period. No, it's not financial year, and AP is not same. Accounting period is the period for which your accounts are prepared. Yes, clear or not? Still confused? See, financial year is separate. Financial year is a concept of tax. Accounting period is for the period that you prepare your accounts for. Got it? Financial year is a tax concept. Accounting period is what you make your accounts for. Clear or not? Ashu. Financial is a tax concept. Financial year is to determine which rate of tax will apply. Tax is payable as per financial year, but accounts are prepared as per financial accounting period. Accounts will be prepared as per accounting period. Tax is paid as per financial year. So the rate of tax will be decided as per financial year, but your profits will be decided as per accounting period. So I'll just do one thing. What I'll do is I'll take you back to F6, that is UK taxation, and I'll rework the things in front of you. Okay, I'll rework the things. Once we are done with this, I'll rework the things. So just note it now that you have to pay tax. Due date of taxation is 9 months. The due date is 9 months from and 1 day after the end of AP. So if your accounting period, can I do it here? No. So if your accounting period let me wait to learn financial year, then I can differentiate. Okay. So financial year is basically 5th April to 6th April to 5th April next year. That is the financial year. You get it? So financial is basically 6th of April to next year 5th of April. Yes, if your accounting period is 1st Jan to 31st December. Financial year 6th April to 5th April, right? Yes, you have to pay tax according to your accounting, your profits. See, for the purpose of determination of profit, for the purpose of determination of profit, use accounting period and also for the purpose of determination of rate of tax, you have to use financial year. Let's go back to F6 and see a few two set of accounts. Obviously, two set of accounts have to prepare. Let's just go back to F6 and study a bit more, because I know this is a bit overwhelming topic. So I'll just take you back to F6. So we'll do a bit about knowledge. of 6. Give me 2 minutes. Let me just clear your concept on this. Just give me 2 minutes. Let's go back to F6 and then take our concept, make our concept from there, and then apply it over here. Okay. Where is that part? Give me 2 minutes. Right there. Next. So I don't need to take you back. Let's focus over here. I don't need to take you back. It's already there in my notes. So see, the financial year is going to run from 1st April to 31st March. It is identified by the calendar year in which it begins. Okay. Yes, guys. So financial year, but it should not be confused with tax year, right? Which runs from 6th April to the 5th April. So financial year is 1st April to 31st March, and tax year is different. Tax year runs from 6th April to the 5th of April. That is financial year and tax year. Let me see if we have given you this when I come. Okay. Many a times what is going to happen is that your AP, what is AP? What is AP? Accounting period. It is going to fall in 2 financial years. So financial year is generally from what date? So usually your financial year is from 1st of April to 31st of March. From 1st of April to 31st of March, right? But what if your accounting period falls in 2 financial years, right? So what if your accounting period falls in 2 financial years? The corporation tax liability has to be calculated for each financial year separately, as I told you. If either of the following change, if the corporation tax rate changes or the rules of the calculation of corporation tax. So if the rules have changed, so you will apply different rules for one set of financial year and different rules for the other set of financial year. I can tell you 1st April to 31st of March, and suppose you are preparing a longer set of accounts. So this maybe you are preparing to 30th of June. Just imagine, maybe your accounting period. So this is your accounting period. It's falling in 2 different years. Yes or no? It is falling in different financial years. This is financial year 1. This is financial year 2. Ashu, Nupur and Rashmi. This is falling in different financial years, right? This is your accounting period falling. One is in financial year 1 and the other is in financial year 2. So whenever in any financial year, suppose the tax rate has changed. So this will have different calculation and this will have different calculation, or the method of calculation has changed. Suppose it says that now you cannot take interest income. So suppose in the new financial year, it says that we will not consider interest income to be part of the income. Then in that case, this separate rules will apply for financial year 2 and separate rules will apply for financial year 1. Ashu, does that answer your question or not? Ashu, does that answer your question or not? Then if rules don't change and tax doesn't change, then obviously, then, but it has been the same now. It says that it has been the same for last financial years. Last 4 years it not changed, and also rules have not changed. So you will not need to split the calculation of the liability in your exam. In which year? It has to be as per accounting period. It has to be, you don't have to split them. You'll be asked for calculation liability. They'll not ask you which year. It has to be as per the accounting period. So you follow the accounting period. Let's say that the AP is from 1st Jan to 31st December. Okay. Financial year 2019. Okay, let me just make the timeline that Ashu is asking for. Yes. No problem. 1st Jan 19 to 31st of December 19. Okay. Then it is falling in 2 financial years. You are going to say there are 2 financial years. So this financial year ends on 31st March. Financial year 1 is not 31st December. Financial year is 31st March. Financial year 1 is 31st. Ashu, you're mixing it up. Ashu, you're mixing it up. Financial year 1, this is the first financial year. And this will be the other till 31st of March 20. Yes. So separate calculation for this and this. But if rates have not changed, then you can give a simple single. One tax will be paid in financial. No, tax is always, see again, what is the due date? Due date is always from the accounting end of the accounting period, not financial year. Tax will always be paid from accounting period and not the financial year. Ashu, is that clear? Yes. Clear or not? 1 minute. Yes, tell me. You want me to come back to the timeline? Yes. That you'll have to ask Boris Johnson. It's not confusing. First of all, Nupur will not find it confusing because she's doing it for the first time. So it's like this cup. How much water can I fill in this? If it's already filled, so you'll have to unlearn all the knowledge from your CA. No, no, Ashu. Tax will not be computed. See, you always compute tax on the basis of accounting period, not financial year. So unlearn what you've learned in CA. So you'll have to unlearn that. You are comparing Ashu, you are comparing it with Indian income tax. And that's the problem. There is no concept of financial year. Ashu, I'm so sorry, I cannot unmute you. You'll have to ask it like this. Let's see if I can unmute you. Okay. Try unmuting yourself, Ashu. Yes. Are you able? Yes.
Hello.
Yes, Ashu, tell me.
Yes, sir. So, like, if the accounting period is different and the financial year is different, and tax is computed as per accounting period, then
Yes.
what is the role of financial year?
Financial year, because see, what happens is the government comes out with its budget, and it comes out as per the financial year. It cannot come for every separate company. It cannot say na that for you the budget is this, for you the budget is this. So the government comes out with a budget as per financial year, but the companies are allowed to have any accounting period.
So, only in case of change of rules by government, then the tax rate or the financial year will be different.
Yes, if there is a change, then only it will be different, but otherwise the calculation will be the same.
So the tax will be computed as per
AP
accounting period, and
accounting.
it will pay as per accounting year also.
Yes, it will be paid as per accounting, paid within 9 months.
Yeah, paid within 9 months.
Right.
Okay, okay, fine, sir. now, now I'm fine.
You are comparing it with the
Uh,
Indian
No,
tax.
actually, I was confused not only from today, because last 3-4 months I was getting confused ki what is accounting period and what is financial year, why these two are different, and why these are matlab ki every company has different accounting period. What is the reason why it is so? Because in that case we cannot make comparison with the previous year, we cannot make comparison with the same industry, like in case of consolidation or in case of merger, business combination basically. So how will you make comparison with the other companies?
So that is IFRS. Now that is not, that is reporting. That is not tax.
Yeah, that is reporting. Of course, that is reporting.
Yes, I think
Okay.
that confusion is now solved.
Yeah, now it's sorted. No.
Okay. Rashmi,
Fine.
why
Thank you,
tax
sir.
here? You're welcome. You're welcome. Why tax here? Because tax here is for personal taxes, for the individuals. Okay. Tax here is for the individuals, right? For individuals, if you'll see, so they have a tax here. Okay, let's just take 5 minutes. 5 minutes. I also need to take a walk, otherwise I will die of back pain. Just give me 5 minutes. I'll just take a walk. I'll come back to this, right? 8:28. I come back at 8:33, right? Just give me 5 minutes. And you guys also just refresh your brain of whatever you have studied, right? It might get overwhelming in the beginning, but slowly and steadily you will catch up. Okay, guys, I'm back. Are you guys there? Yes, sir. We never went off. Okay. So, notes: trading profit, interest income, property business profits include income from overseas sources as well. So, any business, any income that you're doing out of UK, that will also be included over here. All the income is included in the computation gross, right? What is QCD? Any donation to charity by a company, except that allowed as a trading expense. So if something is allowed as a trading expense, then obviously it's not charity, right? This is common sense, not a rule. So if you are allowed something as a trading expense, that's not charity, right? Okay. Right. So accounting periods clear. Yes, guys. accounting periods is clear or not? Whenever I'm taking a break, Rashmi and okay, Rashmi and Ashu just assume a longer break. Right. Now coming to the payment of tax. What is the due date? Now for companies that are not large, small companies. What are small companies? Profit which have not crossed the profit threshold of 1.5 million. So if it is the profit is less than 1.5 million, so that is a small company, right? Not a large company. Large company will have exceeded this threshold, but again less than 20 million. So if your profit is above 20 million pounds, if your profit is above 20 million pounds, then you are very large. You are not just large, you are very large, right? So for companies that are not large, you have to pay 9 months and 1 day, already covered. For large companies, it is settled through quarterly installment payment, and it starts during the accounting period. Now there is nothing known as advance tax over here. There is no advance tax, but the payment will start during the accounting period, right? We'll just discuss about it. So, and all the companies have to pay their corporation tax electronically. That means you cannot go there, write a check and pay. You cannot give cash. You have to pay online. And there are penalties for late payment of tax. Yes, UK is years ahead of us, and they've already adopted this tax payment system. Now we are also catching up with UPI and everything. We are almost there, right? We've taken a large leap from like having this small register where you would maintain records and accounts. People have moved to apps like Khata Book. Have you heard of Khata Book? Khata Book, or there are many apps like that, right? So we've taken a very long leap, but for the developed economies, that is US, UK, they've taken small shifts. We have taken a long leap, right? So large company, I've told you, whose augmented profits for the accounting period are more than 1.5 million pounds. 1.5 million is how much? 15 lakhs pounds. So that is in INR 15 crores. Okay. 15 crores. More than 15 crores of profit, you are a large company. But less than 20 million. Right? 20 million is how much? 2 crores. 2 crores is 2 crores pound. What is 2 crore pounds? What is 2 crore pounds? 20 crore, 200 crores. You multiply it by 100. That is very large company, 200 crore rupees. Okay. So we are thinking in pounds now. Companies with augmented profits. Now, how do you calculate augmented profits? Very simple. Take TTP, add the dividends from non-group companies. Group company dividends, don't take. From non-group companies, add that dividend, you come to augmented profits. You are taxed on TTP. But to understand if you are large or small or very large, you have to do augmented profits. So with augmented profit of more than 1.5 million, if it is less than, then you are not large and not required to pay by installments, right? So you can pay after 9 months of your end of AP. Okay. Because obviously the government does not want to burden the small companies. Yes, that's the cause behind this effect. There's always cause and effect. Yes, the government does not want to burden the small companies, but large companies start paying early. Okay. Now, if you've received dividend from the UK and overseas, it is exempt from corporation tax, and it can have impact on whether company is large and whether corporation tax needs to be paid by installment. Now, why is there? Because you have to think analytically. When you're doing ATX, when you're doing advanced tax, you have to think analytically. Tell me, why will dividend have an effect on whether a company is large or not? Why will dividend have an effect? Suppose TTP, right? This is 1.2 million and this is 1.5 million. You have dividends from overseas, from non-group companies of 5 million. So this is company A, this is company B. So if it is A and B, you have dividend from non-group company 5 million. Here it is 0. No amount. Now tell me which one is a large company and which one is not. Yes. So A becomes large. Why? Because this is 6.2 million and this is just 1.5 million. Even though the TTP is higher for company B, even then company A is the large company. Why? Because augmented profits is what we are considering. We are considering augmented profits. Is that clear or not? Yes. Guys, is that clear? Everyone. Am I clear? Guys, am I clear? Please. Okay. So they can have an impact on whether company is large and therefore whether corporation tax has to be paid by installment. So even after having less TTP, the company A has to pay an installment, and even after having more TTP, company B does not have to pay in installment. If you've received cash dividend, it is added to TTP to arrive at the augmented profits. We've already seen that. Now, if you've received dividend from an overseas company, it has to be included. But if it has been subject to tax in that overseas company, suppose company A gets dividends from some company, suppose Mr. Vijay Mallya has a company in UK, which is VMco, right? And he receives dividend from Kingfisher. The VMco receives dividend from Kingfisher. Kingfisher's dividend have been already taxed in India. Now what happens? Then if you have suffered any overseas tax, it will be ignored. Accordingly, only actual cash received is included in this calculation in the same way as the UK dividend. So if you've paid any overseas tax, you have to ignore it. Also, if you have received dividends from 51% group companies, that is also ignored. So overseas tax, whatever you've paid, it is ignored. You take the actual cash that you have received, right? Okay, yes or no? No, overseas tax, any overseas tax that you are suffering, that is going to be ignored. Whatever tax you are, whatever dividend that you are getting, suppose Vijay Mallya VM company is getting 5 million of dividends, 5 million pounds of dividend, and it is paid 1 million in taxes. So will you take 5 and 1 6 million? No, you will take whatever cash they are actually receiving. Okay, it will not be that 6 million, then you get a deduction, nothing of that. Whatever 5 million you are getting, you will take that only. The cash part you will take. Okay. Yes, Ashu. Is that clear or not? Then again, if you're receiving from a group company, ignore it. Now, the 1.5 million threshold has to be adjusted. How do you adjust it? If it's a short accounting period, suppose the threshold is 1.5 million. Threshold is 1.5 million. And suppose your accounting period is just 6 months. So what will you do? Then what is your threshold? What is your profit threshold? It is 1.5 into 6 by 12. How much does the threshold become? Become 0.75 million pounds. Clear? Yes or no? Yes, Nupur, tell me. What's the doubt? Tell me, Nupur. 6 by 9, because it has to be time apportioned. 1.5 million is for the year. Normally the accounting period has to be 12 months. Why will you do 6 by 9? So this 1.5 million is for the year and not the 9 months or whatever, because the year has to be 12 months. Got it? Oh, no problem. Small company, then this is 1.5 million is for the small company only. Once you exceed the 1.5 million threshold, then you're not a small company anymore. Okay. If there is a related, if it's a related 51% group company, then you divide the total number of group companies. You divide this 1.5 million by the total number of group companies. We'll do a question on this. We'll just do. So how are you a 51% group company? If one is a 51% subsidiary or both are subsidiary of a third company. This concept you already know. Yes or no? Yes. You've done group accounts. Nupur. Nupur, have you done group accounts? SBR? Yes. So you know this concept. Now, where more than 50% of share capital is directly or indirectly owned, basically control has to be established. Yes, there are 3 parts of control. Do you remember? What are the 3 parts of control? Yes, what are the 3 parts of control? So control has to be established. One is the shareholding. Second is the right to variable returns. Third is the ability to effect the variable return. So if you have either of those 3, then it is a control, right? Now, suppose H Limited owns 100% of S, then they are related. H owns S1, S2, S3. H, S1, S2, S3 are related. X Limited owns 100% of Y and Z Limited 70% of Z, then Y and Z, and then indirect also. So H owns 70% of this, S owns 80% of this. So they are indirectly related. These are directly related. So if you see the effective interest, what is the effective interest? 70 into 80. So it is 56%. Yes or no? Yes. So they become the 51% subsidiaries, right? So definition of related 51 specifically includes, what is this? So it includes, it is going to include overseas resident companies, but it is going to exclude any dormant company which is not working, or a non-trading holding company. If it's a non-trading holding company, again, we will exclude it. If it's not trading, exclude it, right? Now, number of 51% group companies is determined at the end of the previous accounting period. So if previous accounting period was somewhere over here, suppose somewhere previous accounting period closed on 31st of March. So the number of 51% group companies will be determined over here for the next year. Okay. So previous year will be seen. And the companies that join 51% group during the accounting period, they are deemed to be part of the group from beginning of the following accounting period. So the next accounting period, they will be deemed as part of the group. But for this accounting period, you are not, because you were not there in the previous accounting period. Got it this or not? Got it or not? Tell me. Yes or yes? Okay. Now, companies that leave the 51% group during the accounting period, they are deemed to still be part of the group until the end of the current accounting period. Now, if I leave you here, suppose if I leave you here and no more part of the 51% group, even then I'll be deemed, because on 31st of March 20, I was part of this group. Got it? Yes. Okay. So now again, if two companies are over 50% owned by one individual, then they are not 51% group companies. It can only be linked through corporate parent. Understand? If suppose I am holding 50% in McDonald's and 50% in KFC, does McDonald's and KFC become group companies? No, because I have to establish one corporate which has to hold 50% in each of them. Okay. Got it? Yes or yes? Great. Now, what happens to a 51% group company? Now, the 1.5 million threshold used to determine whether the company is large. It is divided by the total number of 51% group companies. Also, whatever dividends is received from 51% subsidiaries, they are excluded from the calculation of augmented profits for the purpose of deciding if. So we've seen these two things. First, you will divide the total number of 51% subsidiaries, right? And secondly, whatever dividend is received from them, that is excluded. Got it? Yes. Yes or yes? So two things that happen. Two things. Very important. Two things. One is divide by total number. Divide by total number. And second is exclude the dividend. Exclude the dividend. These two things you have to do. First is divide the total 1.5 million by the total number of subsidiaries existing at the previous closing accounting period. And secondly, exclude the dividend received, right? Again, whatever installments are paid by large company, they are based on expected corporation liability, corporation tax liability for the current accounting period, and therefore necessary for companies to produce an accurate forecast of their current period tax liabilities. You'll have to prepare very accurate forecast. Aisha Arora. Okay. Is that you, Ashu? Is that you, Ashu? Yes. So you are not focusing here. You are sending a message on the group. Yes. Focus is out now. Sir, we are all out of focus. No problem. I'll send you these notes. Don't worry. I'll send you the notes. Sir, we are out of focus now. It's already, sir, 8:53, sir. Wait. 7 more minutes. Wait. Companies will normally be able to obtain a refund if they subsequently find that the installments have been overpaid. So suppose you see that, I've paid more tax, so I will get a refund, right? The government will not hold back so if I've paid more in terms of my installments, then I'll get a refund also. Good thing. interest will be charged or paid based on the actual tax due as per the final. So after the end of the accounting period, you'll prepare the final return. You will get interest or you will have to pay interest. If the liability is less, then you will pay or get. If actual liability is less, you will pay or get. Tell me, if actual liability is less, you will get interest. If actual liability is more, then you will pay interest. Right. What is the rate of interest and how it is calculated? That we will not cover right now. So for 12-month accounting period, 4 installments are there by the 14th days of month 7, 10, 13, and 16. This is very confusing. I'll just draw it for you. So 12 months from 1st of April to 31st of March. Okay. 31st of March. Now first by the 14th. So month number 7. So month number 7 from this is April, May, June, July, August, September, October. So 7th of 14th of October, 14th of October, right? 10th month is October, November, December, January. So 14th of January, 14th of January. 13th month, what is the 13th month? So 10th month is January, 11th is February, 12th is January, this is October, January. 10th month, 11 is February, 12 is March, April. So 14th of April, and then finally 16. So 14, 15 is May, 16 is June. How does it become July? June. So it becomes June, right? 14th of June. Following the start of the accounting period. So accounting period starts from 1st April. First is 10th month, 7th month, 10th month. So this is 7th month. This is 10th month. This is 13th month. This is not no month. This is 13th month. 12th month. This is 13th month. So no tax liability here paid. 13th month and then 16th month, right? Is that 16th of July? How come? April is 13. April, May, June. 13 is April, 14 is May, 15 is June. Okay, this is July, right? So this is the 16th month, 14th of July, right? Yes, Ashu, you're absolutely right. Yes, it will be July. Yes, Rashmi. All of you are right. Okay. So 7th, 10th, 12th, 13th, 16th month. Right? So just see, the government wants taxes after 7 months. It is going to give you time till 7th month. Then 7, 8, 9, 2 months gone, it wants. Next, just 1 month gone. Then again 2 months gone, it wants. 11 and 12 gone, it wants on 13th. Then again 14th and 15th gone, it wants on 16th. Yes, 2 months gap. Again 2 months gap, right? 10th to 13th is 11, 12, and then again 2 month gaps. You can remember it like this. Yes, clear or not? Yes, guys, clear or not? So next, for the next class, it is advised that you unlearn first. It is advised that you unlearn. It's very important. I hope you liked the class today, and I would like to hear any feedbacks from you. If there is any feedback that you want to give, right? Okay, guys. So that will be it for now. I'll see you next time. Till then, keep studying, keep learning, because that's what helps you grow. Bye bye. Take care. Namaskar. Thank you. I'll share the notes. I'll share the notes. Don't worry. Any questions? Anything? I'll be open for that. Any questions? I'll share the notes. Don't worry. So this is easy to remember. 2 months gap. So first will be 7. Just remember 7th. 7th month you have to remember. First installment on 7th month. That's all you have to remember. Then 2 month gap. 7, 8, 9, 10th. And again 11, 12, 13. And again 14, 15, 16. Right? Okay. Bye bye guys. Thank you so much. Thank you. Bye guys.